JP Morgan recently raised their odds of a recession from 40% to 60%, and Goldman Sachs raised their odds to 45%. All of this plays into poor expectations about the labor market. While the labor market has been strong, it hasn't been going in the right direction. Yes, unemployment is at all-time lows, but it's also been rising. Zoom in here, and you can see that the unemployment rate has gradually been ticking up since hitting a 54-year low of 3.4% in April 2023. A persistent rise in unemployment like this could be seen as a recession signal. Just look at the lead up to the 2008 Great Recession, for example, and you see something very similar: a gradual rise before the economic collapse. In 2001, the same thing. In fact, the recent rise in unemployment has lasted longer than we've ever seen without leading into a recession. And there's another key recession indicator that's flashing red. It's known as the SOM rule. The rule states that when the 3-month average unemployment rate is 0.5% above its 1-year low, the economy is in recession, or one will soon follow. And you can see how reliable it is. Every time the SOM rule has been triggered, a recession has followed within 6 months. In most cases, it's already started. And the SOM rule was triggered again in July 2024, when the 3-month moving average of the unemployment rate was 0.53 percentage points higher than its low in July 2023. But that was over a year ago, and so far, a recession is nowhere to be found. So does the collapse of confidence in the labor market spell an incoming recession, or is this a false alarm? There are genuine reasons to believe a recession could be around the corner. Rising unemployment, negative unemployment expectations, and increased bank recession odds all point to a grim picture. But the labor market appears strong by several key measures, at least for the moment. That's why it's important to keep a close eye on leading statistics like initial jobless claims and non-farm payroll jobs to see if they start to move in a concerning direction and fulfill those negative expectations. At Capital.com, we'll continue to keep you updated on the latest market trends and developments. Thank you for watching.